Picture this. It is the morning of March 27th, 1980. The location is the headquarters of Batch Halsey Stewart Shields in New York. This is one of the oldest and most respected brokerage firms on Wall Street. But right now, the executives are sweating through their suits. They are staring at a computer screen that shows a number in red. The number is negative $135 million. That is the amount of cash they need immediately to stay solvent. If they don't get it, they close their doors by noon. If they close, Merrill Lynch takes a $300 million hit. If Merrill takes a hit, unsuspecting local banks across America fail. The contagion is spreading at the speed of a telex machine. The chairman of the Federal Reserve, Paul Volcker, is monitoring the situation from Washington. He knows the entire U.S. financial system is standing on a trapdoor, and the person holding the lever is not a terrorist. He isn't a foreign dictator. He is a 275-pound oil tycoon from Dallas, Texas, named Bunker Hunt. He and his brother had just attempted the most audacious gambling maneuver in history. They tried to buy every single ounce of silver in the world. And for a brief moment, they actually succeeded. To understand how we got to this cliff edge, we have to go back. We have to go back to the source of the money. The story begins with a man named H.L. Hunt. He was a mathematical genius and a professional gambler. He allegedly won his first oil well in a poker game in the 1920s. By 1948, Life magazine labeled him the richest man in the United States. He had 15 children by 3 different women. But the 2 sons who matter for this story are Nelson Bunker and William Herbert. They grow up in a world where money is abstract. It is just a way of keeping score. When H.L. Hunt dies in 1974, the brothers inherit a fortune. Bunker Hunt inherits an oil empire, but he also inherits a worldview. He is paranoid. He looks at the U.S. economy in the 1970s and sees a burning building. And frankly, he isn't wrong. Let's look at the numbers from 1974. Shutterstock inflation is hitting 11.3%. The stock market has lost 45% of its value in 2 years. The U.S. dollar has just been severed from the gold standard by President Nixon. Bunker Hunt believes the American democracy is crumbling. He tells his brother, any idiot can run a printing press. He believes paper money will eventually return to its intrinsic value, 0. He wants assets that the government cannot print. He wants something tangible, something heavy. He looks at gold, but in 1974, Executive Order 6102 is still in effect. It is illegal for private U.S. citizens to own monetary gold. So Bunker looks at the poor man's gold, silver. The fundamentals look incredible. In 1973, silver is trading at $2.90 an ounce, but the world is consuming 450 million ounces a year. The mines are only producing 245 million ounces. There is a massive structural deficit. It is basic supply and demand. So the brothers start buying. But here is where they deviate from normal investor behavior. Most people buy a futures contract. This is a paper agreement to buy silver at a later date. Usually, you sell that paper before the date arrives and take your cash profit. It is a bet on the price, not a purchase of the metal. Bunker Hunt doesn't want the paper. He wants the metal. When his contracts expire, he takes physical delivery. In early 1974, the brothers buy 55 million ounces. They physically move it to Switzerland to keep it away from the U.S. government. They hire armed circles of Texas cowboys to guard the transport planes. It requires multiple Boeing 707s just to lift the weight. The sheer volume is staggering. They own more silver than the central banks of Europe combined. The price jumps from $2.90 to $6.70 in mere months. They have doubled their money instantly. But they don't sell. They just sit on it. For 5 years, the silver sits in Swiss vaults, gathering dust. And then the world starts to break. The year is 1979. The Iranian Revolution overthrows the Shah. Oil prices skyrocket from $15 to $39.50 per barrel. Inflation in the U.S. screams up to 13.3%. People are panicking. They are dumping dollars and buying anything that will hold value. Bunker Hunt decides this is the moment to go for the kill. But he knows he can't corner the global market with just his own money. He needs partners. He flies to Europe to meet with two Saudi sheiks, Ali bin Masalam and Mahfouz bin Mahfouz. These men control a significant portion of Saudi Arabia's oil wealth. Bunker pitches them a simple idea. The West is dying. The dollar is dying. Join me in silver, and we will rule the new economy. They agree. They form a secret partnership called International Metals Investment Co. With Saudi oil money behind them, the Hunts return to the U.S. markets. They start buying futures contracts on the COMEX in New York and the CBOT in Chicago. The scale of their buying is unprecedented. By the fall of 1979, they are buying thousands of contracts a day. Each contract represents 5,000 ounces of silver. The price starts to climb vertically. $8 in August, $16 in September, $25 in December. The short sellers are getting massacred. Short sellers are traders who bet the price would go down. They include major bullion banks, jewelry makers, and industrial companies. Normally, when the price goes up, shorts can just buy back their contracts and exit. But the Hunts are taking all the physical silver off the market. There is no silver left to buy. The shorts are trapped in a room with no exit, and the water is rising. The Hunts are now executing a classic squeeze. But here is where it gets interesting. The mania spills out of Wall Street and onto Main Street. By January 1980, silver hits $40 an ounce. The public loses its mind. People are tearing apart their homes looking for silver. They are melting down their grandmother's tea sets. They are selling their wedding rings. Burglaries in the United States spike dramatically. Thieves aren't stealing TVs. They are stealing silverware drawers. The astonishing part is the inflow of scrap silver. So much old silver is being melted down that the refineries can't keep up. But the demand from the Hunts is infinite. They just keep buying. On January 17, 1980, silver hits its all-time high, $50.35 per ounce. The Hunt brothers are now sitting on a position valued at $4.5 billion. In today's money, that is nearly $17 billion. They control 77% of the privately held silver in the world. They have effectively demonetized the currency and replaced it with their own metal. But they have made a powerful enemy. Tiffany & Co., the famous jewelry store. They take out a full-page ad in the New York Times. It is an open letter to the Hunt brothers. It reads, "We think it is unconscionable for anyone to hoard several billion dollars of silver and drive the price up so high that others must pay artificially high prices." Tiffany isn't just angry. They are lobbying. They are talking to the exchange directors. And this is where the Hunt brothers made their fatal miscalculation. They forgot that the casino is owned by the House. The board of directors of the COMEX is made up of industry insiders. Many of them are short sellers who are personally losing money to the Hunts. They realize that if they play by the rules, they will go bankrupt. So they decide to change the rules. On January 7, 1980, the exchange changes the margin requirements. Margin is the down payment you need to buy a contract. They raise it from $1,000 to $75,000 per contract. It's a massive hike designed to drain the Hunts' cash. But the Hunts just borrow more money and pay it. They are stubborn. So the exchange goes further. On January 21, 1980, the COMEX announces Silver Rule 7. This is the financial equivalent of a nuclear strike. The rule states that trading in silver is now for liquidation only. This means you can sell silver, but you cannot buy silver. Think about that for a second. Imagine going to an auction where the auctioneer says, okay, nobody is allowed to bid, but anyone can sell. What happens to the price? It collapses. Because there are no buyers allowed, the price has nowhere to go but down. And that is exactly what happens. Which brings us to the slide. From the peak of $50, silver begins a jagged, painful descent. It falls to $35, then $25, then $20. For most investors, this would be bad. For the Hunt brothers, it is a death spiral. Here is the math problem. They bought most of this silver on margin. They borrowed money from banks to buy the silver, using the silver itself as collateral. When the price of the collateral drops, the bank calls you. This is a margin call. The bank says, your silver is worth less today. Send us $10 million cash by 5 p.m. or we sell everything. The Hunts are getting these calls every single morning. They are bleeding cash. They stop buying cattle for their ranches. They mortgage their oil pipelines. They stop paying their employees. They are funneling every cent they have into the margin calls. They pay out over $100 million in a single week. Bunker Hunt remains defiant. He believes it's a temporary dip. He believes the inflation thesis is still true. But he is fighting gravity. On March 14th, the price falls to $21. The international banks start to get nervous. They start cutting off the Hunt's credit lines. The brothers are now insolvent. They have billions in assets, but zero cash. And then comes the morning of March 27th, Silver Thursday. The price of silver opens at $15.80. It immediately plunges. By mid-morning, it is trading at $10.80. Batch Halsey Stewart Shields, the broker we met at the beginning, makes the call. They need $135 million to cover the Hunt's losses for the day. Bunker Hunt tells them, I don't have it. The line goes dead. Panic erupts on the floor of the exchange. Traders start screaming. If the Hunts default, Batch goes under. If Batch goes under, the clearinghouse fails. If the clearinghouse fails, the market freezes. The Dow Jones starts to crash. Rumors are flying that the major U.S. banks are going to refuse to open their doors the next day. This is no longer about silver. This is about the solvency of the United States banking sector. The CFTC, Commodity Futures Trading Commission, rushes into emergency session. They have to stop the bleeding. They instruct the banks to stop selling the Hunt's silver. If the banks dump the 60 million ounces the Hunts hold as collateral, silver will go to zero. They need a bailout. But the government cannot be seen bailing out two billionaires who tried to rig the market. It's an election year. So Paul Volcker orchestrates a private bailout. He gathers a consortium of banks. They agree to loan the Hunts $1.1 billion to pay off their debts. But the terms are brutal. This isn't a handshake deal. This is a dismemberment. The Hunts are forced to form a partnership called Placid Oil Company. They have to pledge every single asset they own into this partnership. Their oil fields, their real estate, their prized racehorses, their ancient Greek coin collections, even their personal Rolex watches. Everything is collateralized. The banks now own the Hunt brothers. They are banned from trading speculative commodities forever. They are forced to slowly liquidate their silver stockpile over the next decade. This massive supply overhang ensures silver prices stay depressed for 20 years. The squeeze is over. The Hunts have lost. The aftermath is messy. In 1988, the brothers are dragged into civil court. A Peruvian mineral company sues them, claiming the crash destroyed their business. The jury finds the Hunts guilty of conspiring to corner the market. They are fined $134 million. It is the final nail in the coffin. In September 1988, Nelson Bunker Hunt files for Chapter 11 personal bankruptcy. His net worth has gone from $16 billion to a negative number. At his bankruptcy hearing, he creates one of the most famous quotes in financial history. A senator asks him, "Mr. Hunt, how does it feel to lose $1 billion?" Bunker looks at him, adjusts his glasses, and says, "$1 billion isn't what it used to be. But here is the twist. Here is the part of the story that most people miss. The Hunts were wrong about the timing, but they were right about the asset. If they had simply bought the silver with cash and not used leverage, they would have survived. Even at the crash low of $10.80, they would have been up 300% from their initial entry of $2.90. Greed didn't kill them. Leverage killed them. They bet money they didn't have to make money they didn't need. And surprisingly, this isn't a tragedy for the Hunt family. They kept their oil assets in the end. Over the next 30 years, the price of oil rebounded. The family quietly rebuilt their fortune. Today, the Hunt family is worth an estimated $20 billion. They are actually richer now than they were at the height of the silver bubble. But the scars on the market remain. Every time you see a sudden spike in a commodity price, traders whisper about the Hunts. We saw it in 2021. The silver squeeze movement on Reddit tried to do the exact same thing. They tried to buy up all the physical silver to hurt the big banks. Hashtag silver squeeze was trending globally. But it failed. Why? Because the market is too big now. And because the regulators learned their lesson in 1980, they watch the margin levels like hawks. They will change the rules before you can ever get that close again. So, what is the lesson here? Is it that silver is a dangerous asset? Or is it that the game is rigged? The Hunts proved that if you threaten the existence of the system will change the rules to destroy you. It's a lesson in power. You can have money. You can have oil. You can have 100 million ounces of silver. But if you don't own the regulatory board, you don't own anything. Silver is currently trading around $30 an ounce. Adjusted for inflation, the 1980 peak would be over $140 today. Some people believe another squeeze is inevitable. They believe the paper price is still fake. They believe the physical shortage is real. Are they the new Bunker Hunts? Or are they just walking into the same trap? I want to know what you think. Was the liquidation only rule a fair move to save the economy? Or was it theft by the establishment to protect their own bad bets? Drop your verdict in the comments. Fair game or rigged? I'll be reading the first 100 comments to see where you stand. And if you want to see what happens when a country tries to back its currency with gold and fails, make sure you subscribe. We're doing a deep dive on that next week. Thanks for watching.